Hi guys, Andy here. Let's have a look at the DAX futures. Today is Tuesday, February 6th. Time is around 5:30 p.m. GMT. So, as you can see, the primary scenario with the zigzag here, zigzag correction as an A, B, C, got invalidated because we took out the high right here. And the reason that I was assuming this zigzag was that I was observing five waves down here, 1, 2, 3, 4, 5. So the interpretation was that this was an A wave, then we would have a B wave. For some time, it looked quite good, like this messy structure here, ending quite strong. This is typically something for a B wave, but then we should have, of course, our wave C down, and instead we took out the high right here. So the zigzag is invalidated. And now that I have a closer look here at this structure, I've been not so accurate in my interpretation. What I actually like to see for an impulse, or what's the most reliable pattern for an impulse, is not only counting the waves. If you would count only the waves, you would get a lot of impulses, in my opinion. But you also have to interpret RSI. And what I like to see is that we have a break of the RSI trend line during the wave 4, and that we then end with divergence as a fifth wave. And actually, that's not the case here. Here for the fifth wave down, like in the 15-minute, we are not breaking the RSI trend line, and we are also not ending with divergence. And if we go to the 1 hour, here we end with divergence, but we actually do not break the RSI trend line during our fourth wave. So therefore, indeed, it looks like this is more three waves instead of five waves. And actually, it has to be three waves, because we cannot correct an impulse up with one impulse down. That's simply not possible in Elliott Wave theory. So therefore, we can take out the count right here, and let's have a look what we could have instead. Actually, this opens the door to several scenarios. I will guide you through them. So first of all, if this is three waves down, it actually could be that this here was our wave 2 correction. So remember, in my higher time frame analysis this weekend, I discussed the scenario here in green, where we could have a wave 1 finished, and that we now are waiting or doing a wave 2 correction, and that this becomes our target area. This target area is based on Fibonacci levels. These are guidelines and not rules. So actually, it is possible to have shallow wave 2 retracement, so that we do not reach this area. And so then we actually have enough. We have 1, 2, 3, which is a corrective move. So first of all, this could be or wave 2 correction down. That's one possibility. Another possibility would be that the wave 2 is still ongoing, and then we could actually have an expanded flat structure. So then this would be the wave A, 1, 2, 3. Then this here, or overshooting wave B. And then what should follow is an impulse down, a wave C down, probably going into this wave 2 area. In order for this scenario to hold, it is important that we stay here in this area, the area between the 1 and the 1.236 fib extension. If we would go beyond this level right here, then this is unlikely to be a wave B. So for the moment, I will keep this scenario as my primary scenario here on the chart. But remember that the scenario with the wave 2 right here is actually equally valid. For the moment, we do not have enough data, let's say, to decide what's actually going on. If we would take out the low right here, so if we would come back and taking out the lows right here, then I believe it is more likely that we are doing the A, B, C expanded flat structure. However, as it looks now, it could be that this further develops here as our wave 3, and that this here was simply the wave 2 low, a shallow wave 2. What is for sure is that this structure right here has nothing to do anymore with this. So I would not agree with a scenario where this is a wave 3, for instance, and that we are now working on a wave 4. No, if we consider RSI right here, it looks like this structure right here has nothing to do anymore with this. So then that means that this could be a 1, this could be the 2, or this could be the 2 ongoing, or this could be the start of the wave 3. Now, the bearish scenario I explained in my weekend analysis is actually also still a possibility. Remember here the overshooting wave B in the higher degree. Like that would mean that we can have, as shown here, WXY as wave W here, then a wave X down, and then another Y structure up, like W X, I'm sorry, wave. So wave, I'm sorry, wave W, wave X, and then wave Y up. And this wave Y is then another WXY structure. So I can put this on the chart. That would mean that this here, we have a lower degree. And so this structure we then have here as well. And combining these two different structures makes a WXY structure in the higher degree, like this. So that's also a possibility. So as you can see, a lot of possibilities, in my opinion. Unfortunately, what we have right now, it's difficult to state a preference for some kind of scenario. At the moment, they all look kind of valid, I would say. Here, even the overshooting B in the higher degree, the bearish scenario is still a possibility. Like I said, the wave 2 can also be located here. We can have expanded flat structure. So in order to decide on some kind of scenario that we prefer, I think we need a bit more data. I think it's important to look at this level right here. If we would take out the level right here, then for me it looks like we will have the expanded flat structure A, B, C. Okay, that's it for now. If you enjoyed this analysis, please like, subscribe, comment to support my work. And I see you one of the next days for another video on the DAX. Have a nice day. Bye bye.